Stop chasing. Look, it's Marcel, aka Honey Bunny Sunny, and you know I'm on a mission to make you some money. Listen, today I'd like to talk to you all about a strategy to build wealth over time. Right now, most people that are investing in the stock market have probably heard this phrase: diversify. You hear it all over the news: diversify, 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 diversify. When I hear diversify, I hear safety. I hear trying to control something that can't be controlled. I hear fear. I hear a lot of different things. Now, I'm not an extremist, so I'm not saying that there isn't some room for diversification, like in your portfolios. Like, you literally may have portfolios for different reasons, which I think in itself is the diversification, right? There's different approaches or strategies that you may have for different portfolios, but diversification, in my opinion, has no place in a long-term strategy outside of there just being different things that you're interested in. But when it comes to a particular sector, right? So say you have a portfolio, you're investing in tech. I don't think that you need to have 10, 20 tech companies in there. I believe that a very good, and there's so much proof to back this up, right? The Hut 8 example that I gave in a previous video, that was a call that I made. That stock has, maybe 5x'd from the call. That alone would have made you rich, depending on, on what you put in it, right? I didn't take my own advice in this particular. I keep saying that I'm kicking myself because I usually do. I build out a position and keep building it out, and it always works out. But for some reason with Hut 8, I took profit a little early, right? And still had like a year left in the contract. But for leaps and for equity, the wealth strategy is being very well versed and very, convinced or certain. You'll never have 100% certainty, right? But getting to a point where you've done so much research and so much, you have so much conviction because of everything that you've seen, right? You've done the fundamental analysis. You've looked at all of the financials, the cash flow statement, the balance sheet, the income statement or P&L statement, right? You've vetted that, right? You've gone through the management positions. You're familiar with who's running the company, right? You're looking at the market cap. You're looking at the earnings per share. You see all these different things that are telling you that this is a great stock. This is a great company, right? You take that information, combine it with that stock being down 20, 30, 40% or more, and you have a good foundation to build a huge house, right? If you wanted to build a mansion, would you build a foundation that's right here and then another one across the street and then another one down the street and then another one in another city? No. Not if you were trying to build a mansion on a plot, right? You would build a strong foundation, and then over time you would keep building that place up, right? So the point that I'm making is, when we get super distracted, that's when we lose money. When we get hyper focused, that's when we make and accumulate money. The wealthy people of this world were hyper focused. Now, you don't have to be a genius like Elon Musk or Steve Jobs or whoever. Or like let's throw some black people in there. A Nipsey Hussle. You know what I mean? Like a Honey Bunny Sonny. You know what I mean? Like, you don't have to be a genius like those people. But you do have to be focused. So you don't have to create the next new thing, the next innovation, but you can identify the person that's doing that and doing it the best and get behind them at the right time and continue to pour into that share or that leap, right, over time. If you notice, if you look at like the Magnificent Seven, you look at the top companies on the stock market, these companies have been around for most of your life. And then the new ones that have made their way into the Magnificent Seven or like the top technology stocks like Nvidia, Palantir, they may not have been around as long or not popular as long as you can remember with an Apple or a Tesla or whatever, right? Or Amazon, but they are building the future, right? Chip design, AI. So they are going to be around a lot longer than you'll probably be alive, honestly. So why would you not take advantage of times when they're not doing the greatest to just continue piling money into it? You got to think, for companies like that to fail, that have billions in cash, right? Enough to buy companies for billions with the stroke of a pen. These companies don't fail often in the long term, very seldom. They always win